What's up, everyone? Excited to use this video today about AMC, which is rocketing higher in reaction to news that this APE conversion is actually being blocked by a Delaware court. So this is a great sign for AMC, as this massive share dilution event won't take place. So this is great for AMC shareholders. Obviously, it's pretty bad for APE shareholders, but with that being said, if you're an AMC shareholder, you're extremely happy with this news and extremely excited to see that the Delaware court has ruled in the favor of AMC shareholders and is not allowing this APE conversion to AMC shares to take place. So great news for AMC there, and it's definitely a justified reason to have the stock moving higher today. So awesome to see all this news. With that being said, let's take a look at the chart and see if we can't give a logical price prediction based on some technical analysis for AMC. So when we take a look at the chart here, we can see we ended trading in Friday's session at about $4.40. Obviously, we rocketed higher in the post market, well into the $7 range. So that tells me that we've moved over this resistance level at about $5, which is where shares had consolidated in the past, where shares had bottomed in November of 2022, is where shares had bottomed in January of 2023 and April. So now that we're above this resistance level, definitely a good sign. And we're also above resistance at $6.40, which is where shares had bottomed in May of 2022. It's also where shares had topped out in January of 2023. So definitely a good sign to be above both of these resistance levels. And now that we're above all these major resistance levels and we have moved above all daily moving averages, well, I think we could see some more upside for AMC. So let's just take a look and see kind of when's the last time shares have been above this 200-day moving average. Well, we can see that we came and tested this level back in February, but we weren't able to close a daily candle above this 200-day moving average. So the last time we were able to close above this 200-day moving average was back in August of 2022, when shares were were about $15. So this will be the first time we're above this daily moving average in almost a year. So that's a great sign of bullish momentum for the stock, and definitely could lead to some more upside for shares. As I said, the move higher definitely does make a lot of sense, just because this massive share dilution event that was expected throughout the market won't happen anymore. So that is a great sign fundamentally for shares. The question is, how high do we move and how quickly? Well, the next major level of resistance I see is about $10, which is where shares had topped out in September of 2022. It's also where shares had topped out in June of 2022. So this level is likely where we see shares move higher to and consolidate a bit. So my prediction is we move, from 7 to 10 over the coming trading days, just on the backs of bullish news and bullish momentum. So that's kind of how I'm trading AMC. I'm going to be looking for that move from about 7 to 10 for next week. And then if we break $10, we could see a move up to 15, which is where shares had basically topped out in August of 2022. It's also where shares had bottomed basically in December of 2021. So I would really want to feel, I'd feel more confident about that additional move if we were able to move above $10. But like I said, my official prediction is, we move to 7 to 10 next week based on bullish technicals. And then with that being said, I'll take a look at this seasonality trend chart. So this shows me which months is best for AMC in terms of price performance, which months the stock typically does pour in. So we can see here in July, shares typically rise 2.4%. And then in August, shares typically rise basically roughly 8%. So, to be up 2.5% on average seems like not much, but July is actually the second most bullish month on history for for AMC. So this seems like a small number, but to have this kind of bullish news lining up with bullish technicals, lining up with the bullish seasonality trend, with July being the second best month for the stock in its history, well, it does seem like we're primed for some more upside for AMC. And that's just a call on the technicals, not making a long-term call on the stock. I'll do that in a second here. And then let's take a look at short interest data. So there's about 28% of the float sold short at this current time. And we have a days to cover of 8. For those that don't know, days to cover simply tells me the average, the days of average volume it would take to cover shares that are sold short. So typically, this number here is kind of a gauge of short squeeze likelihood. So to have this number at 8 isn't bad, but typically what we look for a potential short squeeze is a number of 10 here. So, we're only 80% of the way there, with days to cover at 8. But given the high short interest as a percent of float and that 8 number is pretty close, I would give this basically a B plus to an A minus in terms of short squeeze likelihood. So definitely, short squeeze definitely does seem somewhat likely for this stock. And then let's take a look at some retail chatter data here. So we can see this is Wall Street Bets. You can see that the stock has become the most talked about stock on Wall Street Bets over the past day or so. So this kind of tells you that we're setting up with a ton of retail chatter for Monday morning. So that could lead, to some retail traders really getting into shares, kind of diving in head first to shares. I could see that Monday morning, since this news event happened post market, I bet there weren't many retail traders that were, kind of trading off this news right away. So to have the whole weekend to kind of digest everything, and there will be a bunch of videos like this one being put out to inform people, that will only exacerbate the retail buying on Monday. So, I definitely do think we see some retail traders dive headfirst into shares Monday, and we're seeing that chatter really jump up over the past 24 hours, which isn't shocking given the news. And then let's take a look at the insider trading trends. So we can see here that in Q1, there was actually 80,000 shares sold by insiders at AMC, which is never really something you want to see for a stock, right? When the people who know most about the company are selling shares, it's pretty much always a bad sign for the stock. And especially in this case with AMC being trading for so many years, it's not like this is a new company that had just IPO'd and someone's entire net worth is in it and they're just trying to diversify. No, this is probably more of a company specific sell than it is just trying to diversify a large director's assets. So this is definitely a bad sign. I won't sugarcoat it. I don't tell people what they want to hear. I just tell them how it is, and this definitely is not a great sign for shares. But like any one metric or news event, it's not the end all be all, right? So with that being said, let's take a look at Seeking Alpha here. So they put all these grades here: the valuation, the growth, the profitability relative to peers. So in terms of valuation, the company is being graded out as an F, and I'll dive into those numbers a bit more granularly and tell you why that grade is so bad. So first off, let's start off with the good. When we look at price to sales, we see a price to sales number of 0.56, which is very good. That means the stock is trading at a decent multiple price in terms of price to sales. So we can see that the sector median for this number is 1.22, meaning that AMC is trading at a discount to the market in terms of price to sales, and their 5-year average for price to sales is 2.4. So the company is trading at a discount relative to the sector in terms of price to sales, and they're also trading at a discount relative to their own 5-year average. So overall, pretty good numbers to see this price to sales ratio so low. But in the same breath, the company isn't making money at this current time. The PE is non-existent, which obviously isn't a good sign, and is really why the grade is F here. And then when we take a look at EV to EBITDA, we can see that we're trading at 183 times, which is well above the sector median of 9 and well above the the 5-year average of 140. So in terms of EV to EBITDA, we are, definitely trading at a premium to the market. So that's not a good sign there. But anytime you have poor valuation numbers, you always want to see growth numbers be very strong to kind of support those high valuations that investors are paying, right? And let's just think about this fundamentally. So if an investor is paying up for a company that isn't making any money, they always want to see growth to kind of tell themselves that, okay, this company isn't making money now, but they're growing at a rate in which they could make money in the future. So that's kind of the logic there. And we definitely do have good growth numbers for AMC. So year-over-year growth numbers are at 28%, which is well above the sector median at about 5%. And then revenue growth for the next 12 months is at 24%, which is well above the sector median at 5%. So these numbers look very good, but I would point out one thing: year-over-year revenue growth for the past 5 years for AMC has been about 47%. So we are seeing revenue growth slow, and we also see a decline from 28 to 23%, which is obviously slowing growth. Although we're still growing, we're just slowing down that pace, which I don't love to see, honestly. But the growth numbers of 23% for the next 12 months and 28% for the past 12 months is definitely still a very good number and shows that the company is growing at a decent clip. With that being said, let's take a look at some of the profitability numbers for AMC. So we can see that the company has a gross profit margin of 8.9%, which is really, really good for the company. The sector median is at 49%, so obviously we're below where we should be relative to the sector. But we're above this 5-year average of gross profit of which is at minus 15%. For those that don't know what gross profit is basically just revenue minus cost of goods sold. So it tells you what you make on every single thing that they sell. So any ticket that they sell, they're making 8.9%. So obviously there's other costs that go into running a theater and running this company, which is why the company isn't EPS profitable at this current time. But this gross profit margin tells you that if they're able to continue to grow their revenue, right, grow their sales, well, they're making money on each sale. So they're, in theory, if they're able to continue to grow their sales, they can get to a point where they are making money. So that is definitely a good sign. And this gross profit margin has improved drastically compared to the past 5 years for the company. So I do like to see this massive improvement, compared to the company's history. Obviously, we're still below the set. That's sector median of 49% though. And then when we look at cash per share, so the company has almost $1 in cash per share, which is basically 20% of the market cap. Obviously, that's changed a bit, and it's closer to 15% right now. But to have that dollar in cash definitely does give the company the ability to fund its future operations. But I'll take a look at their balance sheet in a second here, and we can determine if the company is adequately funded to fund its future operations. And then let's take a look at how the stock has performed relative to some of the peers here. So I'm comparing to Cinemac, Vivid Seats, Lionsgate, Spear, Manchester United. And then we can see here that the stock has massively underperformed all of these other peers, which obviously isn't a good sign. But it does offer some opportunity for mean reversion, and maybe we could get this to kind of turn around, which would obviously be a good thing for the stock. But let's take a look at some of the valuation numbers and how they compare. So the stock is obviously not making money, and the stock isn't able to make money over the next 3 years. So 3 years out, the company still projects to not be profitable, which is kind of scary, honestly. especially when you look at these peers here, which 11 times PE, 16 times PE, 9 times PE. Obviously, Manchester United doesn't make money, but this is kind of scary that the company isn't in a great spot in terms of price to earnings. But when we do look at price to sales, the company is at 0.56, which ranks out pretty solid amongst the peers, basically in line with most peers. And then let's take a look at the profitability numbers compared. So profitability of basically 9% for AMC. This gross profit margin is solid for the company when you compare it to its history. But when you compare it to the peers, it's actually pretty poor. With the second lowest gross profit margin being 39%. So definitely, definitely some room for improvement, you could say, in this gross profit margin. When you compare it to peers, it doesn't look very nice at all. And then let's take a look at the short interest. So AMC is the most shorted stock amongst all the peers, but that's probably not shocking to many people, with 29% of the company sold short. And then let's take a look at the balance sheet. So the company has basically $500 million in cash, but they have $9.6 billion in debt. So this tells me that the company has $9.1 billion more of debt than cash. And if you take a look at that, cash position relative to debt, this is actually the worst number amongst all the peers. So when you look at the balance sheet, it does look pretty poor. I'm not going to sugarcoat it. And anytime you're in a situation where you have more debt than cash, you're kind of under the gun in terms of funding your operations if you're not a profitable company, right? So it obviously takes money to run this company at this point because they're not making money, right? Therefore, you're basically burning cash just to keep the company alive. And when you're in a situation like that, you really need to do one of two things. You can either issue new debt, but honestly, rates have risen so much, I don't think the company is very keen on issuing new debt. Or the other option out of the two is to issue new shares, which is what they tried to do with APE, right? That was kind of a clever way to dilute shareholders, right? Make a whole new class and then merge it, or allow a conversion into the common. So that was obviously a dilutive event, which isn't going to take place. But to be frank, that just because this dilutive event won't take place doesn't mean that the company isn't going to dilute shareholders. In fact, when we look at their balance sheet, it kind of seems like they have to, just because they're burning so much cash and they're not making money, and they only have $500 million left. So this does seem like, yes, the APE news is good for shareholders, but you got to keep in mind, just because they're not going to dilute shareholders today doesn't mean they won't tomorrow. And when we look at the balance sheet, which is really why they would dilute shares, it's still in a pretty poor spot. So I don't think AMC is out of the woods in terms of share dilution. In fact, I think we could see a different method of share dilution come out over the coming months, just because management's under the gun. They're not like evil. They simply need money to fund their operations. So it's going to come from one or two ways. They're going to issue new debt, which I would hope it would be new debt. That would be beneficial to shareholders. Maybe they issue a convertible note, kind of get the best of both worlds, or they're going to have to issue new shares, which would obviously be pretty bad for shareholders. So be cognizant of that. Like I said, I don't tell people what they want to hear. If I wanted everyone to like my video and subscribe, I would tell them the stock's going to the moon. But I'm a realist, and to be frank, the balance sheet is ripe for more share dilution. That's just how it is. Sorry. But with that being said, the technical setup is pretty solid, and I do think we are primed for a move higher come Monday and next week. It's just really a matter of, like I said, when they will kind of lock up financing. What would be awesome is if they lock up some debt financing and are able to avoid issuing new shares and diluting shareholders. That would be kind of the best case scenario for AMC. And it's still possible. But like I said, given where rates are, it just seems a little unlikely. But hey, who knows? I could be wrong. Let me know your comments below. If you think I'm right, if you think I'm wrong, where you think AMC is going. If there's a ticker you would like me to cover in the future, just let me know. But like I said, I think this technical setup is pretty solid, but be on the lookout for some share dilution news. So with that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.